All right, we are live with another episode of the Blue Crocus Experience, but it's kind of different as well. This one is a six-part series that we're doing together on financial intelligence, financial pitfalls with business owners, and I'm really excited to welcome Josh to the show and to this training series. Welcome, Josh.
Welcome to the next episode. It's good to be here. Thanks for
Yeah,
having me, Lewis.
looking forward to this. So, what I'm going to get you to do, Josh, is while I share this out to a couple of the different groups, if you could just give people an intro, it will be recorded. But for the people that are jumping on, give an intro on a little bit of your background, and we'll just kind of start the conversation that way.
Where to start without boring everybody?
Maybe Mount Everest.
Okay, yeah, that's a cool story. Well, I'm Josh Meunier. Nice to meet you all, virtually or whatever, or wherever you're watching. Lewis and I actually know each other just because I've been a business coach, I've been a consultant, working with small businesses. But more importantly, I think really the backstory in a lot of people is, how you develop yourself and, the interesting things that come about through the experiences you get. And like Lewis said, I've hiked to Mount Everest, to Everest Base Camp and beyond in the Himalayas. Took a year overseas in Asia before working in Australia and running sales and marketing teams over there. But ultimately, just challenging myself throughout my entire life. Been an All-American lacrosse athlete in college and captain, have an entrepreneurship and marketing degree. And many of you might be wondering, well, how does that even equate to finance? Well, I've learned through experience in a lot of ways after selling my first company in service and construction, so particularly in pools down in Texas. But just leveraging a lot of the unknowns that we all have when we try and get into business. And even working in the Fortune 500s, I thought that I was ready, and you're never really truly ready to start a company. But I'm a recent father and very excited about that. I had to clean off my shirt because I had a little bit of spit up for my daughter today.
Welcome to the life. I love it.
Yeah. And Lewis, you helped guide me through some of that stuff. It's always good to just be out here and talking to different entrepreneurs, and that's what I love doing, is creating impact in small business, as opposed to selling technology or what I did in my earlier life, to what I do now, and helping smaller companies like you guys and a number of other companies now with learning finance, or really not learning it, letting us do the heavy lifting on the back end of finance, and in order to streamline operations, save you guys money, and really improve profit margins, but also correct some of the behavior, so a lot of entrepreneurs can actually accomplish the goals that they want rather than sitting in a business that they end up hating.
Yeah. Josh, yeah, I appreciate that. While I was getting all the housekeeping sorted out, just to give people a background on our experience, you jumped in with me, I believe it was February of last year, so 2023, worked with me on more of a coaching mindset, business development, side of things all through 2023. We paused for a bit, and then you've jumped back in more of a CFO role this year, which I'm very excited about. And it's, we're not going to get into all the details, but if I hadn't been working with Josh, I don't know. Well, Blue Crocus would not have been set up for long-term success. That's for sure. There was some things that I didn't understand, and I'm still learning in the financial side. And that's how this conversation came about. I talked to a lot of business owners who are struggling. They're bringing in, like, my sales are great, but I'm not making any money. And, so I'm struggling, and I can't hire someone to do marketing, or I can't hire the employees that I need. And so that's how this came about, was through my conversations with Josh and my conversations with business owners, because I've been that business owner who's like, made $1 million, but why can't I pay my bills? Right. And so that's a lot of business owners are in that grind. Josh, can you share the details you're able to share of why you got into finance? Because I think that, you weren't always the finance guy, you were forced to become, and you drilled home with me, and I'm still learning this, but accounting is the language of business, because at the end of the day, we're not doing business because a lot of us like what we do, but at the end of the day, we're doing this to support our families and to make a profit and a legacy.
Yeah. I'm just like every other business owner that's been out there of starting a company and almost going bankrupt. And if you haven't been there, good for you. You know, what pushed me into understanding and knowing that I had to start looking at financials was I woke up one day in February, ironically. It was the beginning of February. It was the second year we were in business, and I checked our bank account after getting an alert, and it said low balance, and we had $58 in our bank account. And I was really scared, to be honest, really, really scared. Uh, Luckily enough, what I figured out is our payment processor was holding a bunch of our reoccurring revenue that we had and wasn't releasing it because we were missing one line on the bottom of our website for a return policy. And that equated to about $35,000 that didn't end up in our bank account. So I immediately went into my savings, took out another 15 grand, put it into the business. And from that point forward, I realized that I was missing a skill set that is just vital for me to be a successful entrepreneur, let alone, just be able to pay the bills, right? And not have to live off of $27 for food every week, which is what I was doing when I first started my business. And, that was just a tale in itself. But what I found is I went out, I actually had a business partner whose dad created a multi-billion-dollar company. And what I did is I went and engaged with him and I said, I'm failing in this aspect of my business. I don't know what I'm doing when it comes to this key portion, finance and administration, and I need help. And so he sat with me for months and months and started just beating these things into my head because of, stubborn business owner. I wanted to just grow top line. I was in the vanity metric of I'm scaling my business 300% year over year. That's awesome. But I had no life whatsoever. All I did was focus on business and I wasn't getting the results that I ultimately wanted. And when I equated my hours to what I was being paid, it was like $3 an hour, which is like a quarter of what, even minimum wages right now. And I know there's a lot of business owners out there that can relate to that story because we start a business thinking it's going to be for freedom, but we don't know what we're doing. And trying to figure out where to put your efforts in order to maximize, that leverage ultimately is something that I learned. I had to figure out how to use financials in order to correct the behavior that was going on inside of my business. So I could start leading a life that I really enjoyed rather than just working all the time.
Yeah. And I think a lot of us as business owners were like, the only time I want to look at my financials is when I have to, the day before taxes are due, and pull it out. And we've gone through, because I invested heavily in the business when I started personally, right? And so that was scary to me. It got to the point of like, you don't want to open the closet or the skeletons are going to fall out sort of deal. And so with your breakdown of this is where the money is, this is your assets, this is your liabilities, and we're closing that gap now to profitability, right? And that long-term feasibility of the business. That gives a lot of peace, even though I'm not where I want to be, with the long term of the business. It's really exciting to see the numbers close and have that clarity. And that's what I'm hoping we get here for business owners, or at least point them in the direction over the course of the next 6 weeks. Can you share? I want to share as well, because probably a lot of the people in the group are in the range of like 100,000 a year up to maybe 2 million. Is often who I'm chatting with. But I want to highlight that not, even big businesses struggle with these. And I wonder if you could share the story you shared with me, I think early on. You were at a conference and you pulled this guy over, something happened. You guys ended up talking. Can you share that story?
Yeah. RoofCon is what you're talking about. I was at RoofCon in 2022. And a lot of business owners probably know this, but they don't really realize that your profit on your P&L is an estimate. Okay. And the reason, and now you know this, right, is you're trying to figure out exactly what's going on in your bank account and what's ending up in your bank account versus what's sitting on your profit line. And I was having this conversation. it was it was an after party after the events. And I remember sitting down with this guy who had just started his roofing company and told me that he said, yeah, I did 1.8 million last year. And I was like, wow, that's awesome. How much money did you bring home at the end of the year? And he's like, well, really nothing. And I remember looking at him and being like, that's like having a hot wife with a lot of baggage, right? And which is, what we really don't want ultimately, but your spending habits are really, really unjustified because you're not optimizing your business, or you're trying to just generate business without understanding that just because you generate business doesn't mean you're making money.
Yeah.
And a lot of business owners fall into that category because they want to go to the vanity line where they want to go into these conferences or want to go into these groups and say, yeah, I did 2 million last year. Awesome. But I didn't make any money, which means you basically worked for free. And I'm sure, and I know this for a fact, of scaling to 7 figures and beyond is a lot of work and a lot of heartache and a lot of sacrifice. And I think a lot of business owners quit because they just can't figure out why their bank account doesn't reflect the work that they're doing. And I was the same way. I was the same exact way. But when you start looking at your financials and you start looking at where your leverage is best served, that's where you're going to start figuring out. It's pretty easy for me to tell now what's happening on a P&L versus a statement of cash flow versus a balance sheet, what the behavior is like inside the business that isn't, whether that's serving them or whether it's really just draining them, because I see a lot of people quit within the first 5 years.
What are some of those things that you see when let's say you're peeking into someone's QuickBooks or their financials for the first time? You're looking at the three core statements. What are the things that jump out to you the most often that we can kind of share here? Because some people might be operating in this zone without even knowing it.
Sure. The first place I go is the P&L, like most people would say, but I actually
Can you break down the P&L before you dive into that? What the P&L is for those listening?
Yeah, sure. So your profit and loss statement is really just your revenue minus your expenses. That gives you your profit, and it's got 3 different sections. You have your top line, where what I look at first is how many different revenue streams do you have? So how many services do you have inside your business that you're making money? Then what I look at is what your cost of goods sold are. So that's a variable expense. So it fluctuates. Your cost of goods sold fluctuate with how much revenue you do. All right. So the more revenue you do, the more costs you have, right? And to produce that product or service. So going to your gross profit, I'm looking for a specific percentage, and it's got to be above 40 points. So if your COGS, cost of goods sold, is 60% of your revenue, that means you have 40% left over to handle all of the operating expenses or semi-variable or fixed costs that you have. Okay. And don't worry about the finer details of the semi-variable or the fixed costs. Most people understand what those are. But if you need fixed costs, is rent, right? So if you have like semi-variable, that would be like a sales commission that you're getting off of that with a salary that's attached to that person. So, and then, I'm looking at, all right, what's your expense in terms of your percentages? Like, what are your operating expenses in terms of your percentages of revenue? Because if you spend 60% on your cost of goods sold and then you spend 20% on your operating expenses, well, that should leave you with a 20% net profit. Now, that's like what we call NOI. If you hear that, that's net operating income. Lots of investors, lots of finance people are going to focus on your NOI because then you'll have maybe other expenses or other income that equates to your bottom line or the net profit, which again is just an estimate. So that's your revenue and expenses in a nutshell of how I break it down. But if you're looking at your P&L, those are some of the key like equations that you can use to say, am I effectively managing my supply chain and am I effectively managing my back office?
this was something that was very revealing when you jumped in with us, is we were very heavy on operating expenses and cost of
Mhm.
goods sold. And a lot of that came down to, and this can apply to any business. We're talking about our business, which is an agency. A lot of we're doing websites, SEO, that sort of thing. But if it's a junk removal company or a plumbing company, you've got your employees that are directly doing the work. You've got your all the other expenses that come off that. And if you're too heavy there, then it leaves nothing behind to take care of your admin, your sales, all of that, your rent, all of that stuff. So when Josh is going in, I kind of sidetracked you to explain a little bit what that was, and then
Sure.
if you would go back to what are the red flags that you see when you jump in.
Uh, I think more importantly, the way that I look at businesses is I love looking at their statement of cash flow and their balance sheet to figure out how effectively you're one using your cash that you have, right? Because what happens with your P&L, all three of those statements are connected. And what happens with your P&L is it goes over to your statement of cash flow, this mysterious report that most business owners never get. And I'll tell you the reason how I figured this out is the first time I looked at a cash flow statement, I was like, I don't really truly understand this, right? And then after years of looking at them and figuring out exactly like, all right, I need to know what my sources and uses of funds are. Um, I really started giving talks to different business owners, and I'll never forget asking a room full of 50 business owners, all running somewhere between a half a million to 8-figure businesses, if they were getting the three main financial statements that they needed on a monthly basis, and none of them raised their hand. And I was like, "This is scary." So, I started looking at heavier into working with some of those clients to just dissect their financials. And really, the first place I try and take them to is I go, if we threw out your P&L and we just focused on your statement of cash flow and your balance sheet, because your balance sheet is ultimately your net worth in your business, and your statement of cash flow is going to tell me whether or not you are making money within your operations. So there's three main categories in the statement of cash flow. So there's your operating activities, there's your investment activities, and then there's your financing activities. And one of the red flags, to your point, is if they're losing money in their operating activities. That's a red flag for any investor, any financial person that's out there. They want to see that you're making more money in your day-to-day operations than you are inside of your investment activities or your financing.
It's a big deal. Yeah. Appreciate that. We're getting some comments here, so I'm going to bring them up on the screen. Brent, appreciate you jumping in. Good info. The numbers always tell the story. Yeah, I've seen you drilling that down in your group as well. Numbers always tell the story. Let's go and let's grow. Appreciate you guys tuning in. And if you guys have questions specifically for Josh, this is a pretty interactive conversation. And as we get into the next 5 weeks after this, as you guys have questions, we may dive deeper into those topics, as you as the audience, kind of pull some of this stuff out. So yeah, this is, we kind of go through the P&L, we go through the statement of cash flow. One of the things that I thought was freaking brilliant when we started talking was that there were ratios. Can you dive into some of the financial ratios? I'd never heard of this before. I'd heard of roughly that these things existed in accounting that we just talked about.
Mm-hmm.
But then I was like, you can dial in your ratios to really understand the heartbeat of your business and whether you're profitable, where you need to prune. Can you dive into that and then apply it as well to, not just in accounting terms, but like to a service business?
Yeah, sure. I think when most people think of accounting or finance, they kind of think of boring, staring at numbers. And
Yeah.
I was the same way. I totally agree with that I would rather not stare at spreadsheets. But what I found was that I loved looking at and figuring out the problems that are going on inside of business. And there's key equations that you can run that will tell the story of your business, of what you need to focus on to grow and optimize your company. And that's from a revenue perspective and from a profit perspective. And the easier way to look at it, if you're talking to any people that are CPAs or any CFOs, they're going to look at really four main categories, especially for small business. And just so you guys know that are listening out there, is most companies don't need a full-time CFO until they get to a certain revenue level, or they're looking at going out and trying to raise capital. So, CFOs are expensive. They're like $300 to $400,000, right? So a lot of small businesses can't afford that. So we use tools internally that break down these key ratios to make it, simple about correcting that behavior so you can scale to a certain size. And that would be profitability ratios. So measuring, your your gross profit, your net operating profit, your net profit, and then actually using your balance sheet and a combination of the two to look at how well you're generating profit via your assets inside the company. So that's a big one. That's one category, and a lot of people want that big shiny word of profit, right? And yes, it's true. That's where you're going to actually make your money. But you also need to look at how you're leveraged, and that's another key element of the business. Is what's the leverage? Like, are you using debt? And are you effectively using debt to generate income and generate profit? Those are a lot of businesses out there need capital to grow because they've kind of backed themselves into a corner where they've had these habits where they're not actually generating enough income to reinvest back into the business. And that can be a telltale sign of, are you over leveraged inside of your business? And it depends on the industry that you're in, right? There is no silver bullet across all these industries. And if you look at any of the NAIC codes out there, there's over 9,000 industries that you could be classified in. So you're not going to have a standardized procedure in that. But then liquidity, how much cash do you have on hand? How well are you doing in regards to, what your assets are to your liabilities? And those are things that, we work on. And then efficiency. And efficiency is a big one because you can learn a lot about your efficiency ratios, how well you're collecting your cash, how, from a cash flow perspective, how quickly are you paying out your vendors? And I see a lot of business owners getting into cash crunches because they don't effectively manage their cash collection cycles and their payment cycles to vendors. And they don't have that consistent communication back and forth. And it puts them into a cash crunch where they have to go out, get a line of credit, get a loan, and get into this scarcity mindset, like, oh snap, like, what do I do now? Versus planning for the future and starting to correct those habits by utilizing those ratios to do so.
Yeah, it's huge. And I think, you talk about capital, but getting a loan is going to magnify whatever habits you have, or getting a loan or capital is going to magnify whatever financial habits you're already using in the business. Because if you're going down the tubes, a loan's just going to speed that up.
Yeah.
Or capital. If you're operating profitably and you've got a clear path to more revenue and more profit, that's just going to help speed you up in that direction as well. That's huge.
Mm-hmm. Yeah. And to your point, right, is if you want to go out and take a loan, don't take a loan just to take a loan to continue to operate your business. You got to be very specific about how you're going to use that money. And it's not enough to just take a loan and say, all right, cool, I've got 3 more months of operating, but you're operating in bad habits. So now what you did is you just extended a period of time for your business to ultimately put yourself into a much harder financial situation than if you would have just figured out, all right, when do I need capital? How am I going to put that capital to work in order to create a return on that investment? And what's the strategy that I need to execute to do so? And that's where a lot of banks, when money was free flowing and now it's not, they were just shelling that out like, it's candy, on Halloween. But now banks are tightening down and they understand that they're going to look at your financial ratios. They're going to break them down for you, and they're going to determine whether or not you're worthy of those loans. and how risky you are to being able to pay that back.
It's a big deal. Xavier's got a question. Valuable chat. Question for Josh. Where in QuickBooks can a business owner find their break-even point?
Well, in QuickBooks, interesting. So if you're looking at your break even on your P&L, really your break even point is going to be, are you operating over what your fixed costs are, and what are the fixed costs of the business? And then everything else is just a variable on top of that. So I think of break even not in QuickBooks. I don't do it in there. I don't use QuickBooks to break things down like that. What I do is I'll go and I use our proprietary software on the back end to figure out where are your your fixed and semi-fixed costs. How much money do you need to make in order to handle all of that? That's what your break-even point is going to be. So if QuickBooks does it for you, I'm just not as well versed in QuickBooks. I'm not like a certified bookkeeper, even though I've got like accounting in the background.
But ultimately, if you don't know your cost, you're not going to know your break-even point. And looking at your 3 statements helps you determine that.
Yeah.
Josh does have some cool software.
I do.
Can you talk a little bit about that, actually? Since you kind of teased it there, it's been fun to watch you develop this software. So talk a bit about it, because you mentioned as well, CFO is pretty pricey, and so when I mentioned Josh is coming in a CFO role for Blue Crocus, it's more of like a fractional offer. So he's got an offer where he'll come into a business a certain amount per week. So we meet weekly on the plan that we're on. We go through things, we plan, we strategize, we look at what's happening, what needs to happen, etc. And that has been invaluable for me, coming from no knowledge of this before, knowing I needed help, to now, okay, now here's the path that we can take to get there. And that's something that he has as an offer for people. But he also developed a software. So if you want to talk about that, and it does tie back into Everest too. So
yeah. Well, the software is a financial planning and analysis tool that can plug into your QuickBooks and ultimately breaks down those key financial equations that we were talking about earlier. And there's 45 of them that we break down from the profitability, leverage, liquidity, and efficiency side. But what I think and what I've seen from the owners that are using this is the eye-opening experience that they get when they start to identify the trends inside of the business and really looking at how you're doing against your competition. Because that's one thing that we put in there is you have over 100 different industries that you can measure yourself against. So it's pretty close to, if you're in a specific niche, you can ultimately measure yourself against kind of like the overall industry. You just call it that, right? But when I've even worked with accounting firms and they're looking at it and they're going, I didn't even know that I had a dip in, May through July in my revenue cycles. And when you start looking backwards on, the history of the business, you can start planning for the future. And that's why I developed that. Now it's very pricey and it's hard to do. But ultimately it was for the benefit of business owners. So they didn't have to sit there and say, I don't know what I should do with my finances or how to use my financials. I just want the information that I need in order to start developing that strategy to, ultimately be successful.
Yeah, I think the coolest thing for me was, one of the things you break down is your cost per day. And I was like, okay, now we have an actual number that if we're not bringing in that averaged over the month, like that essentially was our break-even point, right? And seeing that was like, okay, now we've got a number that we've got to be hitting and exceeding to get to where we want to go. That was the biggest one that stood out to me. But the trends in efficiency as well, seeing, growing a bigger team is cool around the Christmas table, just say you've got a big team, but if it's not operating efficiently, then it's pulling away from profit, which is ultimately what you need to be paying attention to.
Yeah. Yeah. I would even say even more than profit is what cash is ending up in your bank account at the end of every cycle, every week. Because I've fallen into that trap of I'm, I'm doing all of these activities to try and scale my business, but nothing's ending up in my bank account. And I didn't want that anymore. And that's, I think a lot of business owners never get to seven figures or never get to the life that they want to lead because they're so focused on the vanity metric of growing my top line without managing all the other expenses that are inside of my company. And if you don't do that, you're going to constantly try and outsell your problems, which is not a good place to be.
Nope. It's not. It's a treadmill. So as we go through the next 5 weeks, we're going to start to break down some of these things. What are some of the things that people can expect as they jump in on this? We can go a little bit deeper on some of the particular topics.
Sure. When I think the objective that we came up with is to try and help business owners understand that finance doesn't have to be scary. It just doesn't. And access to information that you need to run your business effectively and just telling stories about, where we've been and making this as interactive with the audience as possible is the objective here, because a lot of business owners that I've worked with have said to me that they just don't know what they don't know. And finance being the lowest score in terms of skill sets from entrepreneurs or business owners. And that's because most of them don't have a finance degree, or they're doing 27 jobs inside the company and they just don't have time, and they want to outsource it to somebody else, and which you should. If it's not your skill set and you don't have somebody with you that knows what they're doing when it comes to finance, you should outsource that. But it's not enough just to get your financials once a quarter or once a year. You are going to back yourself into some pretty hairy situations if you do that. So the objective here is to help business owners really understand how can you use finance to better the behavior inside of your company. And sometimes that means stop taking on clients that don't make you any money. Start focusing on optimizing what you have internally so you can basically fund your business for growth and scale, and ultimately end up in better business health.
It's huge. Yeah. Finances do not have to be scary. They can be very empowering. And I've become more comfortable over the last year and continue to be, and see it as, okay, let's dig in and find where else we can, grow the business, not just, let's push that away and go try and make some more sales.
Yeah. I know.
Xavier asks, what financial ratio do you check in your software when working with a client, and why?
Yeah. I actually look at really like return on assets is a big one. So, and also what your current ratio is. And by the way, Xavier, you're welcome. I appreciate the question as well. But when you're looking at the current ratio, it's measuring your current assets against your current liabilities, and you want to make sure that you have more assets on your balance sheet than you do liabilities. If an easier way to say it is, if your current ratio is 1 or lower, you need to focus on getting more assets into your company almost immediately, because that means you're in a rough spot.
What's an example of that we can relate directly to the service industry? Like how would someone get more assets into their business if they were heavy on liabilities? Let's say they're financing liabilities or accounts receivable or something like that. How can they right the ship as quick as possible?
A lot of it's going to be focused on sales. I hate to say that, but if you put yourself into that position, you're going to have to go sell more and bring in more capital, and also look at managing those current liabilities of accounts payable, any type of credit card situations that you have, any of that. What I mean by current is anything that you can either turn into liquid capital or cash within 12 months, and anything that you're going to owe within those 12 months. So those are your current liabilities. And yeah, a lot of times if you are in that sub 1 ratio inside of your business, you're going to have to go out and sell a lot, and you're going to have to reduce what type of ongoing expenses you have on an ongoing basis.
Prune and grow the top line. Yeah, not that that's the long-term sustainable, but you need to do that to get back to, a more balanced ratio for sure.
Yeah, definitely. And I think the other one that I mentioned was return on assets. So how are you utilizing the assets from your balance sheet? So the cash that you have, but also the fixed assets that you have, especially in a service business, right? We knew by running our ROA we knew that for every truck that we had, if it was a $15,000 spend, we were generating $47,500 in profitability to our company. So when you're looking at return on assets, that's an equation that a lot of people kind of forego or don't know about. But every single employee that you have inside of the business and every single piece of equipment that you have and all the cash that's sitting in your bank accounts, you can start equating to how much profit you're making off of those assets.
The individual, yeah, everybody talks about ROI. What's the ROI on my marketing? But what's the ROI on your employee or your truck? Or that's a topic.
That's a very interesting topic. Yeah.
Yeah, I'd like to. I think that would be a cool one to dive into probably next week. Is
Sure.
that, because then everything kind of flows from that. So let's appreciate you guys showing up. We'll probably wrap up here on this one, and we can. As of now, I'll probably do a poll in the group too, get people to jump in here and listen. We've kind of got a broad brush on it here today. Really appreciate your time, Josh, and appreciate
always,
over the next 6 weeks, the last year, it's been a fun ride, and we're just getting started. But there's so much freedom in knowing your numbers, and it doesn't have to be a scary black hole, because ultimately business is numbers. And it's when you said the language of business is accounting, I think a year ago to me, I was like, man, that's fun. That's never going to be me, right? But there's no way that we can get to the goals that we've set as business owners without having at least an elementary understanding of what's happening.
Definitely. I totally agree. And it's not as scary as everybody thinks. Just find the right assets and resources that can help you so you can focus on what you're good at.
Love it. Guys, appreciate it. Brent, Xavier, Andrew, Matt just jumped in. Awesome having you guys jump in here and ask some questions. Stay tuned. Next week, same place, same time. Josh and I will be back in here, and we'll start off by chatting about return on assets, because that is something that, ROI marketing, that's great. Hold your marketing company accountable to that. But you also need to know what your return on assets are in the company, what's actually happening from each piece of equipment, each person. Are they making you money, or are they losing you money, depending on what they're doing out there. So let's go, guys. Let's make finances less painful and scary. Appreciate you, Josh. Stay tuned, guys, and we will be back next week, same place, same time.
Thanks for having me. Appreciate it, Liz.
Talk soon.
See you next week.